Hello and good evening to wherever you may be watching. Thank you for joining SPI Logistics in this week's market conditions. In Q2 2024, the U.S. freight market is navigating a landscape of uncertainties. As March transitions into April, challenges such as shifting import dynamics and broader global risks loom large. Factors such as the Panama drought, conflict in the Middle East, and the potential for labor disruptions at East and Gulf Coast ports are expected to continue reshaping freight movements. The steeper-than-usual Lunar New Year drop indicates heightened volatility, and stakeholders should prepare for ongoing fluctuations. The potential for rebounds in the market hinges on resolving disruptions, stabilizing trade relations, and the continued capacity burn-off that is needed to bring balance. We will take a quick break and get back to you with the market data. Welcome back to Market Conditions hosted by SPI Logistics, your trustworthy news source for the logistics industry. On this week rate data, the national spot rate reported by DAT is $1.55 per mile, with national FSC at 46 cents for a combined rate of $2.01 per mile. The national contact rate reported by DAT is $2 per mile, without fuel. Note: spot rates have given back some of the recent increases, but look for them to increase further into 2024 as capacity burn-off continues. In our continuing coverage of capacity trends, we now turn our attention to tender rejections. The outbound tender reject index, which measures relative capacity in the market, dropped to 3.74%. For reference, anything above 6% is showing capacity as tightening. The van outbound tender reject index dropped to 3.37%. For reference, the index record low was 2.3%. The flatbed outbound tender reject index decreased to 20.12%. The reefer outbound tender reject index declined to 4.64%. Reefer volumes and reject index will increase with the produce season starting. Note: tender rejections are an indicator of trucking capacity conditions. Declining numbers indicate carriers are losing pricing power, while increasing numbers indicate carriers are gaining pricing power. In other news, Group's Lou's latest court attempt to block California's AB 5 when a federal district court judge in California rejected arguments that the state's independent contractor law should be barred from regulating California's trucking industry. Shipping giant Hapag-Lloyd has stated that they believe peak shipping season will start earlier this year, in June, due to the threat of labor strikes at the East Coast and Gulf Coast ports in the fall. Target is investing in AI and machine learning for inventory management and plans to add 10 new supply chain facilities in the next decade to enhance profitability. Yellow Corp's assets are continuing to be liquidated with millions of dollars worth of tractors and trailers for auction, managed by Ritchie Brothers and Nations Capital across the U.S. and Canada. Nationwide Cargo Inc. of East Dundee, Illinois, filed for bankruptcy on Wednesday. The company reportedly has 183 trucks and 171 drivers. Walmart announced it is closing 24 stores in 2024, while Dollar Tree and Family Dollar also announced they were going to shutter approximately 1,000 locations in 2024. Flock Freight, a provider of shared truckload solutions, announced 54 layoffs on Friday, claiming it was the path towards profitability for the company. The company last reported layoffs in April of 2023. Norfolk Southern and Florida East Coast Railway have launched Florida Express, a two-way intermodal express service connecting ports in South Florida to Charlotte, North Carolina, the railroads announced. And that's everything we have in this week's segment. Thanks for watching, and we will see you next week.